what I'm really looking for, and maybe the question I want to ask is, are vendors creating models which are sufficiently flexible and transparent to allow me to adjust it to any climate state or any forecasted view of the climate on whatever time frame that I'm particularly interested in looking for? And I think we've got a little bit of a way to go there still.
In this session, we're going to talk about bridging the gap. What are we missing? Wondering and asking ourselves what we are missing is a big part of our job in catastrophe modeling. And I wanted to start thinking about the constant evolution of CAT models. So we have an increase, better science, better technology, better data. So I wanted to ask, are there any key signals that we might be missing or where we can improve?
Obviously, CAT models and CAT events are extremely complex. And actually, I think CAT models do a pretty good job considering all the features that we ask them to include. But there are some key ones, I think, that they could be missing. And I'm sure Paul has some insight as well. But, even some of the key sub-perils aren't always modeled. And I think we can't possibly try and model everything. And so we have to be a little bit pragmatic in terms of what we do and don't include. But things like liquefaction, for example, in some earthquake models isn't included, and that can really have quite significant impacts, as we saw kind of in the New Zealand earthquakes. And even for flooding, things like debris flow and duration of events and flow velocity, all of these can have quite significant impacts. And for those really extreme events, sometimes those are the really big loss drivers. But I did just want to mention clustering. So for some perils, we do include that, but not for all. Earthquake is probably a good example where we don't always have that feature. But even where we do have clustering, it can be, we don't always have the interannual clustering. And that can be important when we're trying to reflect a peril like European windstorm, where we get decadal variability and these kind of peaks in activity and these lulls as well.
Maybe just to add to what Sandra was saying, and I agree with all of that as well, but some of the things that maybe I still sort of keep me up at night, I would say, is I think the social impacts on losses is still something that we haven't got a complete handle on. We've seen how big an impact that had in Florida over the last few years, and maybe that's been somewhat mitigated with some of the reforms that have gone on, but I still sort of worry about the potential impact of that, say, a big earthquake event in California. We know there's Reinsurance in California, those sort of implications and what might happen there. That's something that I would be particularly concerned about. Other impacts that I would be thinking about are, we've seen, at least in my history, we've been working in, I started in catastrophe modeling in about 2005, I guess. And so when we think about Katrina, that was a big infrastructure failure, which led to a massive amplification of losses. And we saw the same thing happen with Uri on a different scale, admittedly, but there you had an infrastructure failure leading to a very large amplification of insured losses. And those kind of effects I just don't think are very well accounted for in catastrophe modeling at all. But one of the things I would add to that as well is when we think about how we use those models then, often I think the emphasis then becomes not on necessarily the model developer, but on the user of these models. So these are known things which aren't explicitly included in models, and we know that the vendors are very clear about what they do and don't include. Like Caroline mentioned that earlier today in terms of their event response process, when they're saying what isn't included in those model and those event response estimates. So I think we need to be better about how we think about adjusting and loading our models. I know that a lot of people will have non-modeled loads they apply to curves and how they adjust the output of models. But often that's done in a very deterministic way. It's a very simple sort of scaling factor or those kind of adjustments. I think there are ways we could take and learn from some of the model development techniques around making these adjustments stochastic, thinking about some of the tools, the approaches that are used in developing models and applying them to how we think about making adjustments and making loads. So there's a lot that could be done to sort of maybe, I guess, bridge these gaps in maybe a slightly more sophisticated fashion.
So as it happens, somehow climate change is considered one of the potential gaps in the view that current models offer. And what do you think about that?
Yeah, I think there's quite a lot of difference between the vendors and the perils and the regions. So in some regions like the US, actually, for example, for wildfire, they do try and reflect, near term, the next 5 years or current conditions. And some other vendors are, offering options to change your baseline and shift your distribution for some flood models. But on the whole, say in Europe, I'd say that some of these models are quite out of date, particularly for flood. And the challenge that we have is kind of understanding what those models represent. And because they're calibrated with so many different data sets, it can be quite difficult to know what view of climate does the model represent. So I think having a bit more consistency in the approach across the industry, and also more transparency from the vendors on not for lack of trying, but just having a more firm perhaps view on what period of warming they represent would be helpful. I also just wanted to comment that I think there's a recent story that carbon budget could be exhausted in the next 3 years to reach 1.5 degrees of warming relative to pre-industrial. So the climate is evolving rapidly, and soon we won't be at the current baseline. We'll be at the 1.5 degree scenario. So while the vendors offer climate condition catalogs, it's usually a separate catalog, a separate license. Eventually we'll need to somehow marry up that kind of baseline view and that future climate view. So, it is rapidly changing, and I think we need to rethink our approach for some peril regions.
I think the thing I would add is that a word used in terms of transparency, I think, is the really critical component here. Like, the approaches to adjusted climate views from CAT models have existed for 20 years now. And the first attempts in terms of like warm SSD catalogs or medium-term rates were released around 2006, I believe it was. So that approach has been in. We have academic papers now about how to adjust models, and all of those kind of framework exist and have existed for a very, very long time. But from my perspective, what I'm looking for is really that transparency and that flexibility to adjust any model to sort of any view, any sort of climate state that I'm particularly interested in. That might be a long-term climate state, it might be a sort of seasonal forecasted view, it might be presenting different views of risk to underwriters at different points in time in terms of where you are in a year. I think that's really, really important. So when I think about vendors, have sophisticated approaches to climate change, I would say that what I'm really looking for, and maybe the question I want to ask, is, are vendors creating models which are sufficiently flexible and transparent to allow me to adjust it to any climate state or any forecasted view of the climate on whatever time frame that I'm particularly interested in looking for? And I think we've got a little bit of a way to go there still. I'm very, very excited for the models which are being released next year and a few years afterwards in terms of some of the functionality that's going into those models, in terms of tagging every event with different climate states and state of ENSO, fire weather conditions, all of those kind of features I think are going to be really, really interesting to see how the market adopts those and how they get used and passed around the market. I think it's going to be very interesting to see.
So on the other side of the climate change adjustments, there is the adaptation and resilience, and models have grown in complexity. And if you want flexibility, let's say, they offer opportunities to represent climate adaptation strategies and resilience measures. Do you think that the industry is now able to leverage those features? Let's start with you, Paul.
Actually, so my perspective on this is that so some of you may know me, and those that do know that I've been fortunate enough over the past few years to do some work outside of the sort of core insurance sector, working for things like some of the World Bank projects or sort of more disaster risk financing space. And when I move outside of the sort of core insurance community, the functionality and the capabilities that exist within the current generation of CAT models to account for adaptation and mitigation measures and do things like these resilience measures, so hurricane shutters or whatever else, and how you can protect your property and quantify the benefits of that, it's just seen as light years in advance of what exists elsewhere. So I think people are very impressed with our sort of industry capabilities. So I think that's a really strong selling point, and I'm always very impressed by sort of selling that as a capability of the toolbox that we in the insurance space have just become very, very familiar with. One, and I know I'm taking quite a lot of time up, but one of the things I would say though is that I do think there's a concern that I have about sort of potential misuse of that, particularly as we move to sort of this era where we have lots of access to AI, lots of access to imagery, and the ability to sort of identify all those things. These characteristics, these tools about these adaptation measures, they're never designed to be sort of bulk coded in terms of like, let's just scan the world of all of this data that we can collect now and just code every single characteristic of a property we possibly can and hope that the number comes out looking sensible. That's not how I ever envisioned them being used, at least I understand how they should be used, where they should be much more of a sort of detailed calibration process, comparing it to your claims experience and really using it as a calibration tool to inform the output of the models, not something that should be just bulk used. So I do have some concerns that as we move to this new world, with all of this data availability, that we might start to sort of basically continue a sort of a different form, but a different form of misuse of those tools that we've seen in the past.
And Sandra, do you think that at the large scale, can we use the models to reflect these resilience? So at the local scale, there is a lot of flexibility and lots of exciting ways, but can we use this to enable some additional use case, maybe on the regulatory side?
Yeah, and I just also wanted to pick up on a couple of points. The CAT models are a tool really for you to develop your own view of risk, and it's having the ability to test and the impact of various things is really powerful, and obviously really dependent on your use case as well. I think as Paul's already highlighted, but from an adaptation standpoint, I mean, a lot of the functionality at the moment is site level, at least from a user perspective. You can do quite a lot, but you need that data. And then do you trust the output, like how much data was available to actually validate the impact of, say, that resilient building material or that flood wall? At a community level, it's obviously a lot harder if you're implementing some kind of coastal defense along a section of coast or river defense. It's not something you can typically change yourself as a user. There are a few studies out there. There's just a couple of examples. There was one a few years ago on wildfire risk reduction buffers, also one on Hurricane Sandy and the impacts of removing wetlands. So, these are done, but they're collaborations between academia, the industry, the model vendors. And I think what would be great is to have more of those kinds of studies, but also potentially more flexibility as a user to, have a sensitivity test of some of those types of things. So currently at a community level, I think it's not there, as a model on its own right now, but definitely there are collaboration and opportunities to do more research in that space.
And I really like the line that EP curves are not for humans, but there is other features of CAT models that are meant to be for humans, like socioeconomic factors and additional things. Sandra, do you think that we're missing something on that side, like representing socioeconomic factors that come on top of the physical risk?
I guess just one point I would make is that they often reflect long-term economic conditions, and the reality is very different, usually on a kind of short-term basis. And I think on sort of demand surge, it's a fairly simplified approach. There's just a lack of data and very difficult to quantify it. So I think there's more that could be done in that space, but it's very challenging.
Let's wrap up with one quick question. I thought about this, like if you could if you had one wish for the CAT modeling Jenny, what would you ask?
I think transparency and consistency. So from any provider, just offering data and documentation that's really clear on any assumptions, any limitations, and as consistent as possible in terms of the data that's available. And I wanted to just mention that as part of the OASIS initiative with the model evaluation groups, that's one of the purposes, is to try and get more consistency across the different perils and models in terms of the data and the information that we get. That would really kind of streamline our ability to get to our own view of risk that bit faster.
I'm going to dive in and try and answer that one as well, I think, unless Ludo asks me the next one, which is a little more controversial maybe. Where I sit in the sort of reinsurance food chain in terms of working with an ILS manager, one of the things which I would really want from the community is greater transparency around people's own internal views of risk. Like we often see or pass information from counterparties and cedents where they will present, a modeling role on their own internal view of risk. But there isn't very much transparency about how that's been created, the assumptions that have backed it up, the data that's backing it up. You get some information, obviously, you get the sort of the marketing pitch around it, but I would really like to see more granularity and more willingness to share that information, more willingness to share the internal research work that's done across the community in a much greater fashion throughout the sort of a part of that sort of risk transfer process. I would really hope to see a lot more of that in the future.